Good evening, ladies and gentlemen. Today is the 24th and also the June end monthly expiry. So, also today was Reliance AGM. So, there was a lot of anticipation of that, and we had quite a day where we made a steady up move. I don't think at any point there was, except for I think one point where there was a 150-point dip in Bank Nifty, leading to a slight dip on the Nifty. There wasn't really much concern. It was almost a steady one-way direction. My trade plan for the day was to stay as risk averse as possible, and I think more or less I achieved to do that. I did make another mistake today, misexecuting an order, which cost me about 20,000, and I will have to work on like not making that specific error. I think after I made that error, you could see for the rest of the time I was quite frustrated, but there was no trade left. I mean, the trade was done, so it didn't really matter that I continued to stay in the trade. Regardless, I think the day was relatively one of the better expiries, also due to the events and all that. There was some premiums in OTM strikes, and yeah, that's one thing. Other thing I want to address is I'm getting some comments lately from people who talk about, hey, if you take this trade, you could make 10%, you could have made 15%. You have all this margin available. Why you don't? Now, I just want to point out that I built up that margin steadily over a long period of time by staying very risk averse. And when conditions do suit, and those who've been in the Telegram channel know that November, December, Jan, Feb, when the IVs were through the roof and the prices of options were huge, I would take very high risky trades. I would be straddling into the expiry in the last few months because I would have already created a buffer from trading the entire day. I would be in a good mark to market profit that I can afford to take such risks. In current scenarios where expectation of volatility itself is so low, I don't see the point of taking high risk trades, and I'm very comfortable being risk averse, as much as possible. And today, I think you can see in the trade, there's no point where we're on a declining mark to market. It's just like a steady decay throughout the entire day with slight adjustments here and there to manage risk. But you can see adjustments were also done to manage risk, not to take additional credit as such. So I hope you had a good expiry. It should have been relatively all right, unless you were on the short side of the market, which could have been quite painful. And thank you so much for watching. And I will catch you most likely tomorrow. And if not tomorrow, I will catch you next on Wednesday because I have some other work due to which I'll not be trading. Take care.
Want to meet like-minded traders and discuss option strategies, adjustments and more? Just type in Discuss Nifty in your Telegram search box and join the friendly trader community.
Good morning, ladies and gentlemen. So, looks like we're opening with a slight gap up and pre-market has settled. More or less, the idea for today's expiry is one, it's a monthly expiry, so be very careful. And secondly, it's Reliance's AGM, which conveniently is happening during market hours on the monthly expiry, right? Very convenient. So, it's going to be tricky and can be very tricky, especially on the downside, right? Because Reliance has already run up, and in case there is some disappointment, could be run off. But my personal expectation is that it will be a positive for the stock. And yeah, as far as the option chain is concerned, there's about 80 lakh plus OI built up at 15,800. So my idea will be 15,800 should act as some kind of ceiling unless Reliance has something to do with it. And so I will be setting the 15,850 call, and on the downside 15,600 has acted as a support multiple times, so I will be selling the 15,550 put. So I'm going to keep my distance quite a bit. I'll see. I should maybe get about 15 points for this. If I'm able to get 15 points, I'd be quite happy with that, and that should more or less be the entry trade for the day. Now, during the volatility, the idea will be being a monthly expiry, there should be quite a lot of volatility. So, to the best extent possible, try not to adjust the position too much and take it from there. Keep you posted. I also have this Bank Nifty calendar, which I will book right at the beginning so that that frees up my margin. Okay, I have just entered the position, and it's 15,550 and 15,850. And I'm expecting 15,800 to be protected, so that's there, and 15,600. So this is a good and comfortable range, and I've collected about you can say 14 rupees or so. I've collected about 13.3, and I've spent about 2 rupees 30 paisa on the hedging. So about 11 points really, and that's what I'm working with for now. At least that'll be the entry position, and through the day I'll see if it's possible to take on more, but as of now I don't see too much value in trying to collect more of a premium. I'm quite comfortable with this range and I'll keep it as is. Monthly expiries are invariably more volatile because stock option settlement also happens, so all kinds of random moves will take place in stocks, and if the AGM is a big event, then that will be a problem. We have also booked the Bank Nifty double calendar. The values look funny because I basically have I traded the Bank Nifty yesterday, so it on an intraday basis. So my average prices it threw out the window in a different way. But if you followed this trade from the beginning till end, I booked about 1 lakh of profit on this. The values here will look very different, is because I was trading intraday, so my average pricing will show very different for these strikes. Anyway. So yeah, this is more or less the range. Now I freed up my margin and just put it all to the same trade. My idea is if we break down below 15,650, then I will roll down the calls to 15,800. Once we break 15,700 on the downside, I'll move down half the quantity of my calls. And once we break 15,650, then I'll move down the rest. And on the upside, it will be 15,750. I will move half my calls to 15,700. If we hold for about this particular level for 3 candles. And if we continue to head higher from there, then I will move all the puts to 15,600. So going by straddle pricing also, 15,700 straddle is trading for about 92, and that gives us a range of not even 15,800 on the upside and 15,600 on the downside. So if this is the pricing that we consider, our strike should be quite safe. So all that being the case, not a lot is happening. IT is gapped up and is flat. Bank Nifty is gapped up and flat. So I'll cover something else that I did yesterday. It is basically create a covered call on the Nifty and Bank Nifty. So this will be a trade that I will carry for a while. So I've purchased the August future of Bank Nifty and I've sold the July 35,000 call as a hedge for this future. I will keep buying every third month future as and when it is available, rolling this future forward and selling calls in order to protect that future. This trade basically will make me hold 250 into 35,000. So roughly about 90 lakhs of actual Bank Nifty stock. You have to think of this trade as buying bank stocks worth this much and selling calls in order to do that. So I only have to put up a very little margin in order to hold this trade. Same thing with the Nifty. In Nifty, it's about 80 lakhs. So I've purchased the August future and I've sold the July call just to, if Nifty keeps moving higher, then I will try and make sure that this call doesn't lose too much. But at the same time, it's fully hedged by the future. There is a lot of downside risk to this. Yes, the maximum risk is basically 500 into 15,800, which is about 80 lakhs. But in a down move, I will not just sit and watch my future bleed. I will protect it by selling additional calls, creating broken wing flies, doing all kinds of things to protect the downside. So this is a trade that's going to be ongoing over a period of time, and I'll keep you posted on how that works out. Yeah, right now after the gap up, we are seeing more or less, we saw a slight dip and now we're seeing some strength. I don't believe that we will see too much strength because since the open, there's almost about 9 lakh quantity of calls that have been built up at 15,800. On the put side, not that much strength building up. I think the only place where strength is seen is 15,500 with about 60 lakh. But even then, not many people who are selling puts in this market. At least not at given pricing. Not many people want to sell puts. Okay, so continue to move up and into the rise. Really good amount of 15,800 call writing picking up. Now almost approaching 95 lakh. So unless there is some kind of triggered short covering due to the AGM leading to like 150 point move on Reliance, which is very realistic and possible, pushing it to all-time high, then these shorts will have to cover rapidly. But if not, I think into a rise on $20, this is a good short. Just for a quick, that would be a directional trade. But in case I should take a directional trade, that would be a good trade. Maybe short it at 20 and set a stop loss of 30. Anyway, so far we're holding range, and not a lot happening. There's really not much put side strength building. I mean, proportionate to the kind of call writing, there is not the same amount of put writing. So I have 15,700, which can very easily break with. If there is a down move, it will get unwound very quickly. And I think the real strength would be at 15,500 and 15,600. Regardless, the market is not pricing in much of a move this entire expiry. So yeah, we'll keep you posted. Okay, so we're taking a look at the covered call, for example, on the bank Nifty. Now I have purchased the August future. So this is just, I'm looking at this future not as a trade, but as an investment. And now what will happen? I have sold the 35,000 call of July. So downside is protected, but I will also take some weekly credit. So what I will do is, to this I will add 1st July's 36,000 call. So very far at 70 points. So this gives me an additional 70 points, and in case there is a down move, it protects me. In case there's an up move, then I have to protect the fact that my 35,000 calls will be bleeding. Of course, they will be making less loss than the future itself, and these calls will also start to bleed. So in that situation, I need to then start taking inputs at credit and do all kinds of stuff like that. But 36,000 is far enough away from the spot currently, 1,300 points, which will give me enough reaction time to do that. So I will wait towards close, and towards close I will take in additional credit from the 36,000 call of next week. We'll keep you posted. Meanwhile, the trade so far is looking good. It's giving almost about 2 lakhs in the plus legs, and the hedges are losing about 30,000. Of course, exiting the bank Nifty will show all kinds of mark to market. Obviously, this will show a loss because eventually this put, if it expires worthless, will go to zero, and so will this call, whereas these will not. That's basically me exiting the position. So it shows the mark to market of that also, but doesn't really mean anything. Looks like in the build up to the AGM, the Reliance is actually taking a dip, now 10 points below 2200. So, yeah, Reliance is actually taking a dip prior to the AGM. So, probably, I mean, from the recent swing high, it's dipped close to 70 points from the recent swing high, which was on the 22nd. Some amount of profit booking prior to the AGM. Let's wait and see. I'm actually super bullish on Reliance. I think there's a good chance that the smartphone market eventually gets taken over by them. That's why it's also my largest holding, and long term, I'm super bullish on Reliance. It's the only stock where I don't mind taking very large positions on the put side, especially because I know if it loses, I will roll it forward and eventually it will do all right. Uh, of course, it doesn't mean you throw risk management out when you're trading Reliance, but yeah. Okay, so big fall off on the put side because we've not even tested 15,700 after the open and continues to be strength. And exactly why I'm not going to roll up my puts. There's not much value left on the put side. I'm going to just sit on this position. Don't need to take any additional credit except in the last half an hour. And yeah, there is still good about 9 points minus the hedge is about 7.5. That's a good amount of points. I'll keep it that. If we start testing 15,800, I'll wait and see what to do. Then I might take in more put side credit. I'll be forced to, or I might just instead decide to risk off the calls. So I'll risk this off. I'll take this off and move it to the 15,900 even, and have a headacheless expiry. Okay, Nifty IT is doing what Nifty IT does on expiries. And 1 day before expiry. So this is why I sold TCS put option yesterday, because I knew I would not get better price to do it than that. Yesterday we saw this massive sell-off, Nifty IT, and now Nifty IT is doing this, whatever this means. So always Wednesdays and Thursdays. So Anyway, we'll have to see what happens. So far, all I'm seeing is further building of call side positions at 15,800. So yeah, this is going to be very difficult for people to take out. There has been a good amount of addition, uh, almost about 20 lakh addition at the 15,750, and at the 15,700 also there has been a good addition. About 20 lakh addition, with now the overall open interest being 72. So 15,700 to 15,800 seems like the range that the market will respect, but enough to wait and watch. Not making any changes to my position. This is the monthly expiry. The last thing I want is to move closer and then have a big move after we've been so sideways the entire time. So we'll keep you posted. Time is 10:55. Okay, the time is almost 12 o'clock, and yeah, the strangle has decayed about half its value, slightly more than that, and holding the same range. It's been extremely sideways, absolutely nothing happening on Nifty. IT is looking very strong, heading all the way up, and Reliance has been looking weak and dipped quite a bit, dipped all the way till 2180, which is where it is now, and it's holding that. It's holding that range for a while. It's balancing act more or less, and Bank Nifty extremely sideways. So for now, this looks like an alright range. If we look at the option chain, um, call writing is still quite strong, but there's a good amount of put writing at 15,700. Now, the question will be is, and we've seen this in the past few weeks, whenever there's a slide, doesn't matter what kind of OI is built up on the put side, it gets unwound very quickly. So while I would think upside is capped, unless Reliance does something at 15,800, the downside is not potentially capped. We can't put the same amount of emphasis on the 15,700 put. So half the day is done. We'll keep you posted on what happens. As far as the positional trades are concerned, so the covered call, the additional call sell that I will do, the covered call on Bank Nifty, I'll do it towards the end of today. So this Bajaj Finance is start making an up move after the slight dip till 6,000. So this is doing all right. Covers on everything more or less is as of now in a profit situation, except for Larsen. This cash secured put, once again, nothing to do there. I will sell additional calls on Nifty as well for coming week at 16,100 or 16,200. So this is August dated future. It's covered by a call at 15,800, and in one more shorter expiry I will be selling, but I'll sell a higher strike. I'll show you how that payoff will look. Reliance, the cover is doing alright, but Reliance is taking quite a dip. So let's see. I'm not going to do anything for now. This had given me 91, so it's a very good price at which I managed to enter that position. Yeah, not much else apart from that. We'll keep you. Okay, suddenly some big green candles on Bank Nifty and IT, which continue to trend higher. And at this point, I'm starting to consider moving half of my puts to 15,600, because right now strength is coming from Bank Nifty and IT. If after the AGM there is some strength from Reliance, then that is 15,800. So not in a rush to do any adjustment at this point. Puts will over deflate into a sudden up move because there will be a lot of stop losses hitting. We'll wait and see. Okay, some kind of big move, mainly coming from IT. So IT is just pulling the Nifty higher and higher and higher to 15,800 almost. Now, to compensate for the fact that these calls had really started to explode, I think they went all the way till about 8. I moved up my puts partly. I still continue to think that 15,800 on the upside will hold, and in fact will that certainly hold. So because of that, I am just moving up my puts a little bit just to take additional credit, which will slightly buffer my position. There is a big call side heavy spike because we have had, in about 2 candles, we have broken the entire day's range. So that's quite large. People who were straddling even the 15,750 would have had quite a lot of trouble dealing with that move. Yeah, would have been very difficult to sit through that. Some stop losses would definitely have been hit, and now on the reversal, it would be hurting quite a bit. Regardless, just taken a little bit additional put credit, because once this reached about 2 rupees or so, it's really not going to do much, which is sitting at that point on a naked call. So just a slight adjustment made. I'll keep you posted. Time is 12:23. We continue to make an up move, and IT is really going bonkers at this point. Um, just going up like this, absolutely no tomorrow. One-way track, kind of massive short covering is taking place. TCS Infi both up 3% change. Ridiculous kind of up move. I have no option but to take on credit on the put side, so I have to move up. My real fear is that okay, with this IT up move, if it sustains and then Reliance AGM is some good news and Reliance makes a big up move, then that will really blow up the call side, absolutely blow up. Um, there is a big threat, and there is some amount of call unwinding that has been seen through all this. So this was at 105 lakhs at one point, the 15800 call OI. Now it is come down to about 94, and yeah, suddenly we are seeing strong put writing at 15700 for 750 and 800. So that is picking up. So all that being the case, I'm forced to take in additional put side credit. Can't do much. I have to protect against some kind of runoff in these calls. So in case there's a dip and we once again dip about 15740 or so, we dip to 15740, then I'll be squaring off the puts and moving them back down. But till then, I'll keep them here. It's almost like a protective move. With about just half a day left to go to expire, the Reliance 2200 call is trading at 16. So that shows you the kind of fear that is there on an up move happening on Reliance. So it is tricky. It's a good call to have stayed away from the 15800 call. My initial idea would have, if I were being a little more aggressive, would have been to short the 15800 call and probably 15650 put at the open. But with all the events and this, that, whatnot, I kept a little away, and I think that is why I haven't uh, had a problem with the short covering of the 15800. And let's see, it isn't so bad, but would have been still quite the gamma move. Regardless, we'll keep you posted. While to go now. Okay, so now joining in the action is Bank Nifty, which is heading to the day's high, and finally Nifty IT seems to have calmed down. So both TCS and Infi have halted their up move, and yeah, that is a breather for now. Meanwhile, these puts have lost more value. Calls particularly have not gained. What I'm more on the watch out for is the covering of the 15800. So unless the 15800 really starts to see some kind of panic unwinding, then seems unlikely that I'll have to be too concerned about the 15850. But beyond this, now the next step is to just square this off and sell the 15900. That will basically cut the credit that I have by 4 points. I'll see if that's necessary to do or not. If I do it too early and then there's a reversal, then my puts bleed and it's just all kinds of headaches, whatnot. So we'll wait and watch. Okay, big call side expansion due to the covering, but I guess that should have been anticipated more or less. Now I have moved up my puts further to 15700 because I need the put side credit to deal with this expansion. Also moved up my hedges over a period. I've been moving up my hedges at different points. So eventually all of them will move to 15500. Yeah, big expansion on the call side. Basically, massive amount of demand that picks up once people start covering. Once again, we have balance. So let's see. In case there's a reversal, then obviously it will be back to risking off on the put side, step by step. But so far, had to just keep on taking put side credit to deal with the rate at which we just keep heading higher. Looks like Bank Nifty potentially might head up all the way to 34,900. So 34,900 for Bank Nifty definitely on the cards. Reliance continues to dip now at 2,168. The issue will be if Reliance starts to make an up move, right? So that is clearly the problem here. Keep you posted. Time is 1:80. Okay, so it's half an hour to go for the Reliance AGM, and currently there's about 17 points in this triangle. And what I am particularly concerned about is more the upside than the downside in case Reliance starts to make some kind of a big up move. Because IT has been super strong the entire day. Bank Nifty in the past half an hour has shown signs of strength, and all you'll need to that is add in a Reliance up move, and that really pushes us up. And with the kind of shorts that are in the system, which have gotten covered to some extent, almost about 15 lakhs of unwinding, and the 15,800. Assuming people short was set the open around 1516, got covered quite easily. Now the rest of the day will more or less have to play out. It could be downside if we see, if it comes from something apart from Reliance, because Reliance has already dipped. And yes, in the AGM, it can continue to dip. There's nothing against that, but the rest of the market is strong, which is why I'm more concerned about the upside than the downside. Overall, I would say it's one of those days. It's not rare that you find an expiry where we just steadily move up. That's very rare. We've just been heading more or less in one direction after staying flat for the day. So I'll keep you posted. I'm listening to CNBC and just waiting for the AGM to start running the marketing campaign of how Reliance is and whatnot. I remember last time's AGM, my average of Reliance share holding was something like I think 1200, and I added into the dip of March, and then it was trading at 1960 or something at that time. And I remember it was like, okay, I should take some call side trade, but I didn't. There was a massive up move all the way till 2100 during the AGM. And as the AGM went on, and this is an internal joke, but Akash Ambani came. He speaks like a robot. As he started speaking, Reliance started tanking, went down all the way till 1900, and then the next 2 days recovered or so, and then made that up move. So actually, since a year, no, Reliance has not moved that much. It was at around 2100 last year during the AGM, and now it is more or less back to being in the same range. A lot of people who are watching right now, they make such a compelling video. These CNBC guys, they're like, Reliance has doubled in market cap since last year. Technically, if you look at it from March of last year, not exactly since the last AGM. Like, regardless, we saw a test of 15,800. It's not really spooking out the guys who've sold calls at 15,850. And despite this big marketing campaign that's going on for Reliance right now, it's not really picking up too much from the lows. So for now, this position is fine, mostly because there is enough credit on the 15,700 put, which is quite aggressive, to be honest. So there is credit here, and as long as there is some credit here, I don't have to be too concerned about the upside. And also, a lot of short covering has happened already. A lot of shorts that were there in the system have been covered. Now less than 80 lakh open interest at 15,800 on the call side. So all that being the case, for now, I'm going to continue to hold. From here, if I'm planning to gain potentially about 16 points, I should be willing to take at least a 6 to 8 point hit. So if I close this expiry at a loss, it would be a very proactive decision to have done that by taking on this position. My other option, if I want to risk off and lock in a lot of the profit, would be to roll the call up. On the rolling of the call up, how much would I lose? Yeah, I would lose about 6 points by rolling up the call, and roll down the put also. And on the put, I would lose about roughly about 4 points. So I'd give up 10 points for that, and then I can say acceptable stop loss from there would be 2 or 3 points, but not doing that for now. I'm keeping it as is. Mukesh Bhai is on TV. He looks healthy. He looks good. Body language seems pretty good. Suddenly a big green candle on Reliance. Quite a quick green candle. Almost about 20 points. So yeah, let's get ready for some roller coaster moves. Let's see what happens. I'm going to let this expand. Worst case till about 13, 14. Beyond that, I cannot let it expand, so it'll be cutting out of the position. Yeah, quite. We'll see if volumes pick up on Reliance. I mean, even if there is upside, I would think till 2200, not more than that. And let's see if there is, if Bank Nifty has made a top or not, or continues to move higher from 34,900. It's going to be yeah, quite intense. But basically, I think given that 50 points away from a strike, which is quite difficult to take out convincingly, should be okay. But will not let it expand beyond 1340. Okay, Bank Nifty is just about holding 34,900, and Reliance is just 10 points away now from 2,200. Wonderful. Same time, this 15,850 is not really expanding the way you would in like a panic cover. In fact, the 15,800 call also has more or less held at the same price range. So I will wait for this to expand to 1314. It will mean that I'll be giving up 3 points, but that's the trade I'm currently in. You have to take the risk. Can't be completely risk free. It would take quite a move for that to be possible. It would need Reliance to break over 2200. Due to expiry factors, I doubt now that will be allowed to happen unless the volumes are really insane and this entire thing was played out exactly as someone intended. But anyway, good risk reward in this trade for us. Okay, we are holding now above 15,800, but the relative triangle is not expanding. So I'm continuing to, in fact, be in a mark-to-market gain despite the up move, despite being delta negative at this point of time. So that's what expiries do for you. So it's not going beyond 33. So yeah, not much concern. I'm not kidding. Check this out. This has worked 2 years in a row. When Mukesh comes on screen, Reliance moves up. As soon as they show Akash Ambani, it comes down. It's almost like a psychological thing. I have nothing against anyone. So it's just a joke. But I don't know. When you look at Mukesh Ambani, you feel Reliance is going to do really well. And then when you see that Mukesh Ambani is mortal and is going to have somebody else following up, uh, yeah, red candle on Reliance, big time. We'll keep you posted. Time is 2:11. We have 49 minutes for averaging. Okay, the time is 2:20, and we're still focusing on the Reliance Foundation and its activities and whatnot. Um, Bank Nifty is making some big red candles. That is pulling down the market. The idea will be to let the put, if it does expand on the way till about 11:12, and at that point square it off and sell the 15,650 put. So that will be the only change, if any. Okay, now it's just to be a little careful. Bank Nifty has dipped to 34,800, and I'm expecting 34,800 expiry. But at the same time, I can't sit into these puts expanding into oblivion. So I have taken off half the puts and moved them to 15,650. If we make a continued down move, if we break 15,750, 15,750 also is a very high likelihood expiry spot for Nifty. But if we start heading there, then the potential sell off is too high. So I can't sit on this risk at that point. I'll square off the remainder of these and move them to 15,650. Okay, so the runoff down move got held and then started getting bought and bought quite aggressively. And these calls started to expand to about 3.5, 3.6. So I have moved up the rest of the puts. So the entire position now is sitting on a credit of slightly under 6, and the hedges have about 1 point in them. Almost managed to make another execution error, but got out of it. I was trying to buy the 15,650 put back and sell the 15,700. Instead, I ended up buying the 15,800 call. Yeah, realized my mistake and very quickly got out of it. I can't believe I'm doing this twice in a row, and I'll have to put on paper what exactly is the mistake made. It's purely an execution mistake. It didn't cost me much. It cost me 20,000, so it did cost me, but you need to make that stop happening. I can't afford to make such mistakes. Anyway, we'll keep you posted. 25 minutes to go for averaging, and I wonder if we'll get to any of the solid material on the Reliance AGM before averaging. Okay, currently the 15800 straddle is trading for about 37, and 37 on the upside, 37 on the downside. So unless there's some big runoff move, it's going to pay up quite nicely. Uh, we're talking with Mukesh Ambani is back, and that is showing some green candles, but more or less we've got 20 minutes to go for averaging. 5 points in this triangle. Can afford to lose 3 points. Uh, Worst case from where I am currently. So I have the necessary orders in place to exit, and I've rechecked it so that I will not make any mistake. And yeah, time to just wait through all of this. Also, I wanted to sell additional calls. So on both the covered calls, today will be a good day to do it. I'll sell it in such a way that it's only covering half the quantity. I mean, my month-end calls are already covering the entire position. I will sell very deep OTM. So on the Nifty, I'm thinking 16,200. Bank Nifty 36,000, and I'll sell about 5 lots each because I have covered calls of 10 lots each. I'm talking about this position, and this position, which I entered yesterday towards the close. I posted about this on Twitter. If you're following me on Twitter, you'll be able to see those updates. Definitely some quick moves towards the end, but we're sitting on the 15,800 straddle. Now has an intrinsic value of 4 points and an extrinsic value of almost 30 points. It's trading at 34. Intrinsic value keeps decreasing, but basically 34 points in the straddle. Quite likely that this goes to zero unless there is some big move, which we'll have to wait and watch for, but doesn't seem like it so far. Mr. Ambani spoke about Aramco. It doesn't seem like any concrete progress there, just like subjective stuff that they continue to work on it. Nothing apart from that. 10 minutes to go for averaging. About 3 points, 3.5 points in the strangle itself, and 50 paisa for the hedge. So, about 2.5 points, which means I can afford to lose from here about 2 points or so. Even that I won't lose. It just means I'll just get out of the position and then take in some penny credit from elsewhere. Okay, I hate to keep pointing this out, but IT is making a quick up move in the last few minutes before averaging, and Bank Nifty as well. Slight up move pulling it to 34,900. Now, the question is, will we see something like last time? Will we make a 50-point move into averaging, which has become like the new normal? Still don't have to be overly concerned. It's not going to be easy to do that. And without Reliance participating, very unlikely. But let's see what IT is up to. This last minute spiking of IT is happening. One of two things will happen. Either we actually head to 15,850, or we just hover around this range so that this straddle can crash into oblivion. One major thing to note will be what's happening with the 15,800 call. If that starts to really pick up, then that would be an issue. But for now, nothing to be concerned about. Oh, one more thing. The reason I'm not moving up my puts to 15,750 and I'm keeping a 100-point distance is because it is very possible that into averaging we actually see a 50-point down move and expire at 15,750 because there are a lot of positions built up around that particular strike as well. So staying quite risk off. I can let this call expand till about 4.5, but not more than that. Okay, 4 minutes to go for averaging. An up move that pulled us 20 points above 15,800. Moved up my puts because what have I got to gain left in the 15,700, and now a 65-point down move is needed. Also, since the credit on these calls went up, it then makes sense to take in these puts because in case there's a reversal, at least this call side credit will come down. It spiked up quite a bit, and on a momentary basis, it went up quite high. So back to the same situation. Currently trading at 4. I can afford either of them to expand till about 4.5. That means in that situation, I'll be losing like something like 2.5 points or 2 points, that nature. Nothing that Mr. Ambani said so far should have any big impact. Setting up some new center named after late Mr. Dhirubhai Ambani, and yeah, not much else. So nothing that should really affect the market. Reliance is not moving at all. This last minute move was IT. going bonkers for a second. Probably to get some people out of their position, but still, this 15,800 now trading at 25. 2 minutes to go for averaging, trading at 25. Either tanks immediately at averaging or we start to see them. We'll have to wait and see which comes first. Also, I have changed my exit orders, the panic exit order, to have the right strikes. Okay, averaging is started, and so far no move. We're holding at 15,800 exactly. So might be a picture perfect finish for 15,800. Straddle has just 20 points left in it. What's interesting right now is that the 15,750 put is not really crashing the way I would have expected it to, which is interesting because averaging has already started and into the first minute. I'll wait and see. This expands to 4. That means we've made a down move. I'll be moving these calls down to 15,800 and still a while to go though for that. Okay, it doesn't look like I'll have to roll down my calls, so not going to be doing that. We're already 2 minutes in and we're not making much of a move. So I would imagine this will expire as close to worthless as possible, now trading at 16. And this triangle is now trading at, I mean, each strike has less than 1 rupee in it. So I guess if either of them expands to 2, then that's a good enough exit. And if they expand to 2, which means I can also switch around. Right now, with the spot being centered around a strike, I cannot end with a 50-point triangle because you don't know, the average might be on either side, or average might end up being exactly at the strike. So that being the case, I'm happy with a 100 points triangle. I'll just let it expire as is. Okay, something else to cover is that so today so return will be something like about 3%. You have to ignore the loss that is being made on Bank Nifty of about 20,000 because that loss is coming from exiting the position, just exiting a position. So it'll be something around 3%. And many people will ask what is the margin, and the margin used is about 31 lakhs per set of 66. Now I'm trading 660 lots, so you just multiply that by 10 times. My margin is about 3.2 crores, what was used today. So that's how you come up with about slightly under 3% of a return. I think it's a relatively good expiry. It was very safe and not a lot really happened. Did not have to over adjust. The only thing was initially itself stayed very risk off and just took in more credit when it made sense to. So, I mean, if the trade instead was to straddle the 15,700 or 15,750 at the open, I mean, if you took a 15,700 iron fly, which wouldn't have made too much sense anyway. But if that was the trade, then it could have been a problem during the short covering. And even 15,750 might have got stopped out when we went almost 20 points above 15,800 at a point. But I think apart from that, should have been an all-right expiry. Also, a question that I got last time. Basically, some people they tried exiting these hedges in the last few minutes of the expiry because towards the end you might not get any buyers for this because you're long this, you sell it, you might not find, so you'll lose 5 paisa, 10 paisa, 5 paisa generally. I mean, you're going to lose that anyway. And at that point, if you exit, your margin is going to go immensely into negative. So imagine you have this position, takes 31 lakhs of margin, and you exit the hedges, then it's going to take 90 lakhs of margin. If there is a margin screenshot, which happens, the peak margin screenshot towards the end, there's always a peak margin screenshot towards the end. If that happens, you're going to be paying huge amount of penalties. So never do something which is as stupid as trying to exit your hedges towards the end just to make some 5 paisa or something. Instead, just let them all expire together. They're all going to expire worthless. So you'll benefit from that. Or if you auto square off also, you'll end up paying about maybe 10, 15, 20 paisa. Just take that and be happy with that. So about 7 minutes to go for auto square off, and I'm not going to be doing anything else. I'm just going to let this position expire exactly as is. Okay, looks like there's quite the sell-off in Reliance despite talk of the Jio phone launching soon. Um, I'll wait and see what happens. I had sold this call option at very good price and it's given me a good profit. But I have to also now be concerned with the fact that my shares will be losing. So I'll see what to do as the thing goes. I'm not going to do anything for now. I'm perfectly comfortable just keeping this credit. Yeah. Also, one more thing, I share the orders on the group every day. If you aren't in our Telegram group, you can join us. It's completely free and it's just for discussion. And everyone is free to type. Okay, the auto square off has started. Okay, looks like that is done. And these are the strikes I'm going with. Just selling half quantity to cover my existing position. Okay, I'll explain to you how this look. Okay, it will be quite difficult with all this, but okay. So what this does is, first of all, the initial position is this. It's a covered call with a future. Now, in case it goes up, obviously this call will bleed and lose money, but the future will benefit far more than what the call is giving a loss. And this is July month end. Now, on an earlier expiry, I'm selling a strike which is 200 points above what the monthly call is at. So in case there's enough move, this is almost like a naked call, but this is already a bullish position. And this is for half the quantity. This is 10 lots, but this is a 50 sizing. This is 3 lots, but of 75. So it's roughly less than half. So this is just extra credit. It does the same on the bank Nifty. So this is a covered call with the future, but selling additional calls on a shorter time frame. Now, in case the market moves up, this position will make money, this position will make loss, and then at that point, I might have to take additional put side credit or just roll forward the calls depending on how much the call is losing and whatnot. So all of that is yet to be seen. That's about it. That's done for the day. Thank you so much for watching. I hope you had a good expiry.
Thank you for watching. Please post any questions you have in the comment section. Also, do not forget to like and share the video and subscribe to the channel. To find us on Twitter, Telegram, and Facebook, use the username NiftyBN. Also, we post some of our trades to the community tab, so do not forget to check that from time to time.